Yeah, thank you, Ashley. Now, earlier this month, the Silicon Valley bank failure caused lots of uncertainty, anxiety, and panic. And it's Monday, so you know what that means. It's time for our Crunch the Cost segment with our KAG Sarah Wilson, who joins us live in studio about what this means and how it could impact you. Sarah?
Well, William, while Silicon Valley marks the second largest bank failure in U.S. history, remaining calm in the midst of uncertainty is the future. Which you know from history, William, it's a little hard for people. But I found out what this collapse means and how it impacts you, the consumers. 3 years ago this month, COVID sent the world into a shutdown. And for a moment, many people went into panic. Now in 2023, a bank collapse has shaken up old financial wounds, where staying calm is the remedy in the midst of economic uncertainty in the coming months.
The federal government is trying to avoid as much as they can is another financial meltdown.
Earlier this month, Silicon Valley Bank, one of the largest holding companies to fund business units and groups all over, collapsed. So when people went to withdraw money from banks like JP Morgan or Chase, they couldn't. Deja vu of the Great Depression when the Wall Street stock market crashed, laying off thousands of Americans in the process.
Reserve actually believes that the turmoil in the banking sector is not going to happen.
Finance expert Eugenia Gorina, who studies trends at the University of Texas at Dallas, says it's a lesson our government has learned, stress testing and regulating big banks to prevent another major financial crisis.
After the Great Recession, they have been trying to make the financial system resilient and stable because we view financial stability after the previous crisis as a very, very important public good.
So what does that mean now? Well, you remember the bizarre toilet paper frenzy people went into at the height of COVID. Well, this time that same panic is what could cause more damage than the crisis itself. Gorina says all customers are actually okay. All investments protected under the Federal Deposit Insurance Corporation.
Bank runs themselves. In fact, when people start going for their deposits to the bank at the same time, they can ruin and they can create trouble for otherwise very healthy banks.
And that's what led to this crash. Though to prevent another Great Depression era, she advises people to operate like normal. Don't make any haste investments, stay banking with your local branch, and do not panic.
That regulators are focused on preventing another financial meltdown.
I know you've seen some familiarity with that toilet paper, but DOJ and SEC have both opened investigations looking into whether any of the bank's senior leadership got unusual bonuses or sold stocks days leading up to the collapse. Back to you, William.